Greetings, everyone. Hello, I am Babak Abbassadeh, CEO of Toronto Centre. Bienvenue à notre séance plénière conjointe avec MEDA sur l'adaptation des systèmes agricoles et financiers face au changement climatique. We are delighted to hold this conversation on agricultural and financial systems adaptation to climate change during the International Development Week, which is sponsored by Global Affairs Canada in collaboration with Mennonite Economic Development Associates, or MEDA, a friend of Toronto Centre. Since our establishment in 1998, Toronto Centre has trained more than 23,000 financial supervisors from 190 countries and territories to build more stable, resilient, and inclusive financial systems. Since 2016, we have been incorporating climate risk in our programming because of the substantial implications to global financial stability, risk of crisis from climate change, and financial inclusion challenges. Today, we have a global momentum to combat climate change and to transition to a green economy. This is not easy, but this transition also presents a tremendous opportunity for countries to achieve sustainable economic growth, and supervisors have a key role to play to oversee the financial institutions' risks and help consumers not become victims of greenwashing due to shoddy climate disclosures. Toronto Centre is collaborating with several global bodies such as IOSCO, which is the International Standard Setter for Securities. The Network for Greening Financial Systems, NGFS, encompasses close to 140 central banks from around the world. And the standard setter, International Standard Setter for Insurance Supervision, IAIS. We are their implementation partner in climate risk-related supervisory capacity building. We know that to achieve net zero and to support climate resilience and food security, we need to adopt a dynamic multi-stakeholder approach to problem solving. Financial supervisors are part of the multi-stakeholder ecosystem of crisis management and must continue to adapt to evolving risks. Today, our distinguished panelists will discuss the challenge of food security, particularly for the vulnerable and marginalized population in the emerging markets from different angles. They are our very good friend, Thomas Saleh, Superintendent of Insurance of Costa Rica. He's also the Superintendent of Securities. Nadia Gerch, a Senior Regional Director for Latin America, Eastern Europe, and Asia Pacific. Nadia, what else left from MEDA? And Omoneka Oyer, Director of MEDA. We're also tapping our Carl Hiralal, Insurance and Pensions Advisory Board Chair of Toronto Centre, to moderate this conversation. I have learned a lot from Carl on this topic over the years. You have received their bios. Welcome to our speakers. Toronto Centre's mission is sponsored by our key funders, Global Affairs Canada, Swedish CEDA, and the IMF. I also like to have a shout out for people on my team, Demet Janakce and Jake Dietrich and others who work so hard to make this webinar a possibility. I'm told we have about 270 registrants from close to 70 countries and with a multiple number of agencies that are collaborating with Toronto Centre and would like to learn more. Thank you, Carl. Merci. Cède maintenant la parole à Carl. Carl, over to you. Thank you.
Well, thank you, Babak, for the relevant background information and for setting the stage for an insightful and rewarding discussion by our panelists today. Our panelists come from two different organizations, but with a wealth of rich and practical experience in their specific fields. They're eminently qualified to address the topic at hand: agriculture and financial system, adaptation to climate change. And as you indicated, this is no small feat. The financial services industry's primary goal is to develop and distribute products and services that are needed in the societies in which they operate. The agriculture sector is no different. There is a protection gap that needs to be filled. As you indicated, MEDA is doing a lot of work on this. They have been in existence for over 70 years, lifting people out of poverty by employing a market systems approach that integrates technical assistance with access to capital, and I would stress access to capital. So in effect, the two organizations that the panelists work for have a common goal or outcome. Climate change knows no boundaries. I hope that at the end of this session, the audience would have a better appreciation of the cascading impact of climate change on food security, financial inclusion, and gender equality. These are important linkages or interdependencies that both the financial sector, represented by Thomas, and MEDA, represented by Nadia and Omo, are trying to bridge to achieve a common goal, which is to address climate change through appropriate mitigation and adaptation measures, and measures that promote sustainability, but at the same time are environmentally friendly. That again is not an easy task, because environmental factors do present costs to our agriculture sector. So with that in mind, I would now like to turn to our first panel member to set the stage again for us. Thomas Soli is a seasoned financial services supervisor, and it's appropriate that he set the stage for climate change, because it is one of the biggest issues that financial services supervisors are grappling with at the moment. So Thomas, based on your experience, can you describe the strategies the supervisory authorities are implementing to manage climate change risk in the insurance sector and other sectors in the financial services industry, as well as the region, because you have significant responsibilities in the region in your role as superintendent in Costa Rica? And perhaps also if you can identify the drivers that are defining the strategic actions and the timing in its implementation. So can I pass over to you?
Thank you very much, Carl, for this question. I'm ready for everybody from Costa Rica, a green, sustainable, no army, longest democracy in Latin America. It's great to be here with this great panel. And the financial supervisor has a unique position to build a bridge between public policy, such as the decarbonization strategy, adaptation strategy, and national commitments on the matter, the financial sector, and the real economy. In case of my country, Costa Rica, we established 4 key aspects to define the climate action strategy of the financial sector. Create a common vision is the first one, establish an internal and external dialogue, define a clear roadmap, and establish expectations through a call to action. Let me elaborate a little more. Create a common vision. This is first objective, is key to creating synergies between different stakeholders and enacting action. First of all, keep in mind that public policy is a great umbrella on which the financial regulator strategy must work. And it can also contribute a lot in the construction of said policy. We supervisors do not define policy, but we can help a lot in the process. The second strategy was establish an effective dialogue between financial authorities. A lesson learned in the case of Costa Rica, and I think is the same in any country, is the need to create a dialogue at the highest level in order to align common objectives. First, we, the banking and insurance supervisors who had been working separately, began working together. We saw the need to take the issue to the highest level. For this reason, and with the help of Toronto Center, by the way, about 4 years ago, we managed to organize a high-level meeting between the board of directors of the central bank and the National Financial Supervisor Council and the 4 superintendencies. It was interesting to understand that for some of the directors, this was the first time they had discussed the role of the financial regulator and the implication of climate change for the financial system. From this high-level meeting, it was possible to define sustainable and climate change working group between the 4 superintendencies and the coordination bodies with the central bank. An important effort to build internal capacities begins to address risks related to climate change and align the internal vision from the supervisor. Third, establish an effective dialogue with the market. One of the most important stages is the dialogue with financial entities, knowing what they are doing and transmitting clear expectations to them. In this process, it was interesting to observe how some entities had begun internal work. In the same way, at the sector level, it is observed how the banking sector defined its green protocol, the insurance sector established a code of responsible conduct, and the National Stock Exchange also begins your work process on sustainable finance. Understanding the level of maturity of the market is necessary to collaborate in the creation of additional capacity of the different actors. And fourth, define a roadmap. In the case of Costa Rica, we established 4 strategic topics to be worked on: data, disclosure, vulnerability analysis, and supervisory practice. And finally, last but not least, declaration of action. In addition, last October, very timely and coinciding with the OECD Regional Summit on Environmental Sustainable celebrated in San Jose, Costa Rica, it's also a historic day for the way climate is treated in our Costa Rican financial system. Our 4 superintendencies regulating the financial sector, insurance, stock market, financial institution, and pension, were launching a joint declaration commitment to a resilient and transparent financial system in support for a transition to net zero and to resilient against climate risks. In summary, Carl, building a common vision, establishing a dialogue between supervisors and the market, defining a roadmap, and making a call to action has allowed us as financial supervisors to move from speech to action. Back to you, Carl.
Well, thank you, Thomas. You described quite a lot of actions there, and very important actions that are required by supervisors to incorporate climate change in the day-to-day activities as a supervisor of financial institutions. I particularly note the point you raised about public policy, because that is important, and supervisors have a role to influence the policymakers to take a creative action there. You also talked about the team effort and all of the sectors involved, and that is important. And I hope this comes out a little more later, because there are significant interdependencies between the different sectors if we're going to fight climate change. And in addition to that, I particularly note the fact that you highlighted environmental and sustainable processes to make sure that this happens well. And with that in mind, starting with the environmental and the sustainable measures, you now bring me, that's a good segue to bring in Nadia from MEDA, because one of the things that they focus on is ensuring the measures take into consideration environmental issues. And so, MEDA, Nadia, you have been working in many different countries. You have over 18 years experience in this business. So you are really bringing to us practical experience with respect to this particular subject. You particularly, as we as financial supervisors deal with financial inclusion, gender equality, and access to finance, the work that you do are important in this context. So the specific question to you is, you have been working in the Philippines, among other countries, and I understand this project was born from a need to explore opportunities to increase dignified livelihoods for women and young people in rural areas in the Philippine Islands. With this in mind, could you identify what are the constraints these excluded communities faced, and how is the project addressing their barriers, for example, in the cocoa sector? So could I pass it over to you? Thank you.
Sure. Thank you very much, Carl, and thanks for the invitation. Very happy to be part of this conversation. So the project specifically that I'm going to talk about is called RISA, and RISA stands for Resilience and Inclusion Through Investment for Sustainable Agriculture. It's a 5-year initiative led by MEDA in the Philippines with funding from Global Affairs Canada. And so as I go into the constraint, it is actually helpful to understand a little bit the context where we operate in. So the project is specifically focused on the Mindanao area, which is in the southern part of the Philippines. And so this is a region that is mostly rural, and it's also one of the poorest area in the country. It's also a region that is very well suited for cacao production, which makes it actually a crop that is highly prioritized by the government with a strong market potential both domestically and internationally. However, despite this potential, the cacao sector in the Philippines is yet fully to contribute to the regional economy. And farmers in particular small-scale producers involved in this production continue to face significant poverty issues and livelihood sustainability. And this is actually, as we see it, to a number of constraints. First of all, the sector, and it's happened in many cacao producing countries, the sector is very fragmented. And so most Filipino farms, cacao farms in particular, are very small, ranging often from 1 to 3 hectares. And so the farmers involved in cacao production often grapple with low productivity, inadequate equipment, and very limited access to crucial resources such as like finance, training, and markets. And so in this context, as you've said, women in particular, and women involved in both farming and agribusiness, they face even greater challenges. And I have to say that the Philippines has made some significant progress in terms of reducing the gender gap. However, women continue to face in this sector significant gender-specific barriers, and that includes social acceptability, gender biases, competing priorities between home care and business responsibilities, limited access to networks, and as well as less access to finance, which is actually due to low control of assets and financial resources. Another key constraint that is facing this region in particular is its very high vulnerability to climate change. And that goes from severe droughts episodes to unpredictable rainfalls, which has a direct impact on agriculture production. And cacao in particular in this case is very vulnerable to climate change impacts. So there is really a crucial need here to build more climate resilience in the sector, because this has really a direct impact on the ability of farmers, but also other market actors to sustain income generation out of cacao. So now through this RISA project, how does that MEDA respond to those challenges? So we have developed and we implement an integrated approach that precisely intersects economic development, environmental sustainability, and gender equality. That's in fact what we call it MEDA triple impact approach, which is core to our technical framework. And so how does that work in practice? So on the economic side, the project will combine business development services, access to capital and resources, and will facilitate market linkages and connection within the sector, and especially between the buyers, the suppliers, and other market actors. And that will generate more profitable and commercially oriented relationship that will result in more profit for both farmers and agribusinesses. In the same line, MEDA also intends to leverage local investment funds as well as financial institutions to unlock capital which is available in the market to be invested in SMEs and other cacao market actors. On the other side, recognizing the barriers that women in particular face in agriculture and in the sector in particular, the project will also focus on mainstreaming gender equality and what we call ESG, environmental, social, and governance considerations within the business operations at the agribusiness level, but also at the farm, at the household level. And it does so by incentivizing changes in practices and in power dynamics. And then additionally, also given the extreme vulnerability of cacao to climate change, the project also involves targeted technical assistance focused specifically on climate resilience. And so this technical assistance will involve capacity strengthening and access to resources and equipment that enable farmers to adopt climate smart practices, enhance their adaptive capacity, and then ensure also a more diversified and sustainable production. And then finally, I would say, and this is important to the discussions that we're having today, and also an important part of this project is toward generating a learning and strategic partnership precisely between key industry players and involving private sector, but also government players, government institutions, to support a more conducive regulatory environment and support mechanism that will result really in a more climate resilient and inclusive sector growth. And maybe I can get into more details later on. Back to you, Carl.
Okay, thank you. You raise a number of important issues there. And certainly you highlight the fact there's a number of small farmers, and many of whom are women, but they also, because they're small farmers, basically because of lack of capital, they have low productivity. They probably don't have very good equipment. And so access to finance is important for the success of these kinds of projects. So I hope that later on we can chat about that, and maybe Thomas can pick it up later on. So that's a very important segue for us in trying to identify from a practical perspective the problems smallholder farmers face. So thank you for that. Monica, I'm going to move over to you. You also have a fair amount of experience and expertise on the ground. Both you and Nadia is really where the rubber hits the road. You do spend a lot of emphasis in your work on digital financial services, women and youth, and access to finance. So all of these are important to addressing the impact of climate change. So more specifically, the question to you is, MEDA has a long history of innovation and entrepreneurship in the agri-sector. So can you tell us about a recently approved Honduras project, or at least starting with the Honduras project? And in that context, as you frame your answer, what are some of the key features of this new project in Honduras, and why was it important to incorporate these elements? So can I pass over to you? Thank you.
Thank you, Carl, and good morning, good afternoon to the audience. Thank you for having me today. So as has been mentioned previously, MEDA has a 70-year history working in agri-food systems in Asia Pacific, East and Central Africa and West Africa, as well as Central America. And this particular project that I'm going to be talking about, which is called Opportunities for Circular and Inclusive Diversification of Agriculture. I know it's a handful. We shortened it to OCIDA. This particular project in Honduras is funded by the Global Affairs Canada, and will be a 5-year project starting this year and ending in 2029, focusing on a number of areas that we believe to be innovative and drawing on MEDA's many years of experience working at the cross-section of economic development, environmental sustainability, and gender equality. So one of the first innovative element that we're going to be introducing into this project has to do with a circular economy. So by that, I mean an economic model whereby we are making the most use of the resources that we have, such as water, such as land, the byproducts of the crops that will be grown, in this case, coffee and cocoa. And we're ensuring that there's minimal waste. So we are repurposing, recycling, reusing as much as possible in this particular project. So that's going to be a key focus of this project. Whereas before, many of the sort of projects that we've run follow a very traditional linear model, as does the rest of the world, where there's a lot of waste at the end, a lot of byproducts that are not used at the end of the process. So we're really going to be pushing the envelope when it comes to environmental sustainability on that front. The second area of innovation is going to be around digital solutions. So these are digital solutions that address climate considerations that also address issues around education, so digital financial literacy solutions, but also digital finance solutions. So a big part of the the project is ensuring that we're able to provide support in terms of access to finance for the women and the youth that we'll be targeting. And so we will be looking at how can we leverage digital solutions to do that, not just to advance the financing and make payments, but also in terms of the data that is collected. So that data can help us, can help financial institutions make better credit decisions. It can de-risk a lot of the financial solutions or financial products that are being provided by different providers. But again, there's an element of how that data is collected and how that data is used that we will also be working with to ensure that there's privacy and there's no abuse, and that data is properly used. So that's the second element, is around digital solutions. The third is around partnerships, and I think this has been a big lesson for us in terms of MEDA's history, is that when we're talking about agri-food systems, we are obviously taking a systemic approach. We're not addressing just one issue, and so we need partners in order to be able to have a significant impact. And so we will be working very closely with partners on the ground. Lutheran World Relief is one, Fundación Capital is another, but we'll also be looking to build partnerships with digital solutions providers, with providers of climate resilient technologies, with organizations that are really mainstreaming, know how to mainstream gender into economic development. And so that's really another aspect that we'll be focusing on through this project. So just in conclusion, the three innovative elements are around a circular economy approach, leveraging digital solutions, not just for distribution, but also to enable us to collect data and leverage that data to inform financial decision-making at banks or microfinance institutions. And the third is around partnerships. So really partnering with institutions on the ground so that we have much more effective impact. Thank you.
Thank you. That's a very involved answer, but obviously it's a very difficult task that you have on hand. But you did highlight some very important issues which are common to anyone who are looking at addressing climate change. And the point you raised about the digital solutions and partnerships are important. The many, as Babak indicated, is a multi-stakeholder approach to address this, and I'm glad that you are seeing that is an important part of the work that you're doing. And again, you highlighted sustainability and environmental concerns. So these are important that I hope we will address a bit more in detail later on. So Thomas, you've heard from the people in the field, the practitioners who are what I refer to as boots on the ground in trying to address climate change from a very practical perspective. Obviously, the financial services industry, as I indicated, have an obligation to develop and deliver products that are needed in the societies where they operate. And based on Nadia's and Manika's discussions, I'm sure you appreciate that. So in that context, concerns are further exacerbated by climate change, which arguably is one of the biggest threats to food security. So I want to change the discussion now and focus it on food security. Can you tell us what SUHESI has been doing, or Costa Rica has been doing, to develop capacity of its supervisors, and also in the context of food security?
Thank you, Carl. Great question, because it's one of the main concerns for any regulator, how to align the vision inside the supervisory body. From my personal point of view, to create a vision, it's necessary to start by aligning internal expectations. At the beginning, for many colleagues in the superintendencies, this issue was not relevant. At most, it was seen as a trend, perhaps little related to our supervisory tasks. building internal capabilities to understand climate-related risk, physical, transition, and reputational one, and their impact on financial stability is critical. In the early stage, there was a lot of emphasis on leveling acknowledgement and creating awareness. Secondly, mature knowledge to understand that the strategy to confront climate-related risks could not be through in isolation from the risk-based supervision framework that had been built. Climate-related risks must be identified, evaluated, and managed in the same way as the other risks that financial institutions are called upon to address. For this reason, once the capabilities have been created, the metrics and analysis scenarios have been defined, addressing supervisory practice is necessary. The roadmap considers in its lines of work data, as my colleagues said before, developing of technical and data analysis capability to develop climate risk assessment. It involves important coordination with different government entities and the private sector, of course. Disclosure, I must mention that 2 weeks ago, we started the work of the technical group for the definition of a green taxonomy for the financial sector in Costa Rica. It is a joint work of the 4 superintendencies in coordination with the environmental ministry. The process will involve the creation of internal and external capabilities for development and correct use and maintenance of this important tool. The taxonomy, as you know, will allow us to introduce a climate-related disclosure regime for the financial sector in different ways. Third, in the other hand, for vulnerability analysis, the roadmap also establishes the need to identify exposure to climate risk and carry out vulnerability exercise and stress test. Development of capabilities in this regard, as this stream is identified also in this roadmap. And for supervision and regulation practices. At a later stage, the adjustment in risk management regulations and investment policies must be considered, as well as the approach to this issue from supervisory practice and the evaluation of the supervisory entities. In this process, exploring the role of superintendencies in promoting and evaluating transition plans for the financial sector to a net zero economy will not be absent. But that is not all, Carl. To be successful in this roadmap, and I strongly support the words from Nadia and Omoneka, it is necessary to insist on other aspects that must be considered to enhance the impact of climate action on financial system, such as financial education, digitalization and innovation, and financial inclusion, gender gap, protection gap, and other issues that are involved. These subjects make up another ring of work in the creation in the supervisory capacities, as well as in the analysis of supervisory practice. The effects in the reducing the vulnerability of the most vulnerable people, like agriculture, will be not a minor issue. If you permit me, if you allow me, I have a little example. In Costa Rica, we launched our central bank's payment system, electronic payment system, some years ago, 30 years ago, actually. But with the pandemic, it was very an important tool for everybody, in especial for the small and micro businesses, enterprises. And I want to share an personal experience. I went to a national park beside in the coast some months ago, and when we left the national park, very warm, very hot, very warm weather, with a lot of thirsty, we met a little enterprises selling coconuts, what coconuts, and they receive the payment by Simpe, that is the Simpe Mobile, that is the tool from central bank that is free of use in order to get the money in these sales. And the guy who was selling the coconut told me what important was this tool for them, because they were creating an history in the bank with the different incomes in the banking account. So the banking account give them a big tool to have a better life, of course, but in the process, they are building an history, a banking history that will maybe in the future enable them to get a loan, to get an insurance, and to be in the system, in the formal system, and take advantage of that reality. So this is one of the issues that we are working on the capacity buildings, and they are more than climate change. There are other issues that we must take advantage of. Back to you, Carl. Thank you.
Okay, thank you. There's quite a lot there, but I'll move on in the interest of time. Nadia, I'd like to move to you again, because you bring along with your colleague the individual actual country experiences. So the question is, how are new environmental regulations affecting the various stakeholders in the cocoa sector in the Philippines and perhaps elsewhere if you care? And also, are banks and investors adapting their practices? How are these different stakeholders making the transition to more sustainable practices in agriculture? So the two operative words in those sentences has to deal with environmental regulations and sustainable practices. So can I pass over to you? Thank you.
Sure, thank you, Carl, for the question. So there's a number of regulations that have been laid out recently with impact on the sector. So first of all, at the global level, I can think of the European Union new law on deforestation-free product, which I think was passed in June 2023, has a potentially significant impact on cacao-producing regions such as the Philippines. However, in such a fragmented agriculture system, this may actually place an additional burden on smallholder farmers, particularly in the sense that really obtaining new certification, introducing new monitoring and compliance mechanism, all of this will drive up the cost with no guarantee necessarily of being able to secure a higher price on the other end. There's also a number of opportunities related to this, which I will maybe elaborate a bit on later on. At the country level as well in the Philippines, a number of also regulations have been enacted recently to address climate change and adaptations. And just to name a few, the government of the Philippines, for example, has laid out a strict code of practice for growing cacao. And this code aims specifically to provide general guidelines, technical advices, and food safety and quality for productions, among other things, post-harvest and processing of cacao, and all in line with better natural resource management. Another example is the Department of Agriculture. The Philippines is supporting the establishment of Adaptation and Mitigation Initiative in agriculture, called MEDA, to support specifically environmentally sustainable livelihoods that can effectively manage climate risk. There's also another examples with the national policy that has been enacted in the Philippines, establishing a framework strategy and a program on climate change, and the creation even of a climate change commission. So this is all, very important regulations that have been passed and enacted. Unfortunately, what we're seeing is that these have not necessarily translated into increased access to finance for small-scale producers, and including cacao farmers. And so our assessment shows that, in this case, agriculture continues to be viewed as a high risk by formal institutions such as banks. In fact, even in the Philippines, there is a reform called the Agri-Agra Law that mandates all government and private banking institutions to allocate at least 25% of the total loanable funds for agriculture. However, in practice, what we're seeing is that this is not fully working, and banks tend to prefer at the end to pay penalties instead of lending to agriculture producers. because of their high risk profile. And there's a number of reasons that influence the highest risk profile of farmers. That includes lack of information on credit worthiness, high transaction costs versus small ticket sizes, natural hazards, among other things. And all of this results in these financial institutions that being hesitant to extend credits until platforms such as insurance, support networks, or other risk-sharing mechanisms are in place. And so we're also saying that, a lot of this industry policy and even sometimes government policies, regulations, and standards, even though they tend to support cooperatives and SMEs, they're often considered as gender blind. And very only few interventions or policy targets effectively women, youth, or other, traditionally marginalized populations, such as indigenous people, and their capacity to contribute to and to equally benefit from cacao sector growth. And so all of this results in that the majority of small-scale producers, and cacao producers in this case, as well as rural SMEs involved in the cacao sector, ended up raising their own financing through informal and alternative sources. So I'll just say that at the end, access to finance, but also along the right support mechanism in place and the right partnership continue to be a major constraint that is facing the scalability of adaptive measures in the agriculture sector. However, there are also a number of innovation, and I want to highlight this, that are being tested and implemented, and some of which are being, also implemented as part of this project that I think is worth mentioning, which perhaps I can talk about a little later.
Okay, thank you.
Carl.
Thank you. There's quite a lot there. Monica, I move over to you again for individual country experiences, and I'm looking at the time here. Could you, this particular question, how is MEDA addressing the financial constraints faced in the cocoa or coffee sectors, particularly by producers? And more importantly, are there new environmental regulations affecting the financial markets in Honduras and elsewhere? And are banks and investors adapting their practices? Again, a loaded question, but something that's very important.
Thank you, Carl. I will try and address it in a few minutes. I know we're running out of time. I think the picture in Honduras, unfortunately, unlike many other countries, is showing a decline in actual access to finance, both in urban areas and in rural areas. So, for instance, the World Bank's Global Findex places financial inclusion in Honduras in 2017 at about 47% of the adult population. In 2021, it was 37%. So there was an actual decline. And you see that decline at all levels, women, rural areas, and so on. Another aspect that is quite surprising is that, the pandemic ushered in a digital revolution in many countries. So for the first time, people were forced, because they were in lockdown or couldn't move around, or because of social distancing, people were forced to use digital solutions. Unfortunately, in Honduras, we are not seeing that exponential growth. So the percentage of adults that have made or received a digital payment between 2017 and 2021 sits at about 7%, 7 or 8%. So we're really talking about an environment where access to finance is a significant challenge. And in the coffee and cocoa sectors, even more so, because the areas that we're talking about are particularly susceptible to climate change, particularly drought. So it's called the dry corridor of Honduras. 6 departments that experience long periods of drought, followed by heavy periods of rain driven by the El Nino cycle. And so, that introduces another element of risk that would make it very difficult for financial services providers to address access to finance constraints there, which is why we are introducing the digital solutions as a means of providing information that can help de-risk, and also putting in some of our own capital as a demonstration effect in those areas. In terms of regulations, I wouldn't say for this particular country that there are new regulations. There are existing regulations that just need to be more effectively implemented. So for instance, there is a national water law that is not currently being fully implemented, especially in the areas that we're talking about, where water resource management is going to be the key constraint, is going to be the main factor in terms of our circular economic model. So, how can we work with financial providers to help build their capacity, as Thomas said, in understanding water resource management, understanding the issues in the dry corridor, and what technologies they can finance to enable small-scale producers in those areas to meet their production goals and therefore their income and job creation goals. At the international level, Nadia has mentioned the EU's law on deforestation-free products. Coffee and cocoa fall within those categories. So this is both a constraint and an opportunity. We need to find a way to position Honduras small-scale producers and integrate them into the global cocoa and coffee market. But to do so, they need to show that their products are deforestation-free. So how do we, again, use digital solutions to help bridge that gap and to provide financing that helps them meet the additional costs of production that meeting this new standard, this new sustainability standards will require. So it's a gap, it's a constraint, but we also see it as an opportunity that we can leverage digital solutions to bridge. Thank you.
Okay, well, thank you. A lot of issues, a lot of interest, and there's a fair amount of questions in the Q&A. Let me take a question from the Q&A, and I will direct it to you, Nadia. The question is, what innovations and solutions, such as carbon credits, are local stakeholders testing to address adaptation challenges and environmental regulatory concerns? So can I pass that over to you? I'm glad somebody raised that on carbon credits. Thank you.
Sure, and it's a very, very exciting question, certainly, and something I'm very excited about. So yes, in fact, I'm going to talk specifically about this innovation, which we're currently implementing through that RESET project in the Philippines. So it's basically an initiative that is developed by MEDA and in partnership with a carbon trading company called Kinico, which is a subsidiary of a large cacao trading company, Kinimer Food International. And the focus of this initiative is to leverage carbon trading as an innovative approach to incentivize cacao producers to adopt sustainable agriculture and resource management practices, and ultimately contributing, obviously, to the mitigation of climate change impacts. So the carbon trading initiative in this partnership is in partnership with a cooperative, which is involved in the RESET project. And ultimately, the payment scheme is defined by both the trading company and these cooperatives, and it's essentially to support the livelihood of cacao farmers. And so just, quickly, the rationale really that it's behind this approach lies really in the significant economic and environmental benefits that is offered by three crops, such as cacao. So it can easily apply also to other similar crops. And so the idea is that by encouraging small producers to cultivate cacao under three canopies, a continuous cash income can be generated from first harvesting. And this practice is precisely what helps prevent the burning of forest areas and the destructions of biodiversity habitat, which provides an immediate solution for carbon sequestration. And in this way, carbon sequestration can become an additional source of income for farmers, complementing their existing crops. So for now, we're excited. We've launched this partnership for one cooperative, and the idea is to expanding in the next few months to much more small-scale producers and farming areas in the region.
Okay, well, thank you. That is very encouraging. Perhaps, Thomas, I'll move to you on one of the questions in the Q&A, and then perhaps any other panelists could respond. The question is, how is increasing environmental regulation and also the new requirement for climate risk reporting affecting the work of local producers and value chains, and also financial service providers? What are the risks of unintended consequences, such as exclusion? You want to touch on that?
Yeah, yeah. Thank you, Carl. It's a great question, really, indeed. And for our regulators, this is always, we must keep in mind this balance between what we are regulating and what could be the secondary effects of the regulation, and avoid this exclusion is one of the issues that we must take in consideration when we are defining regulations. At this moment, in Costa Rica, we have now a lot of regulation because we're just beginning. I think with the taxonomy, it will permit us, allow us give a more bold vision in order to what is important to regulate and how to make more easy the disclosure. The taxonomy will identify how the channel change of the financial system is affecting the real economy. And by the way, right now we have the Code of Conduct, Responsible Conduct for insurance sector, and we have the Green Protocol for banking sector. And the exercise that they made is how the value change is affected when they are putting money in one sector, or they are selling insurance, or they are buying services from any providers, and that will make a real effect in the real economy through the financial system, and they must measure what will be this the better way to incentivize, give incentives, correct signals to the real sector when who were loaning money and who are having a contract of services like I don't know, automobile tires, etc. So there is no an regulation right now in Costa Rica, but we know that the responsible enterprise conducts, code of conducts that the companies, the regulation entities are putting on practice will affect this channel value chains, of course, but that is not a regulation issue.
Okay, well, thank you for that. Those are very difficult questions to address. Everybody is grappling with that. But Nadia, I have a quick question here that I'll pass to you, and then I'll go back. Perhaps we have time for one last question, and I'll go back to Monica. The question to you, Nadia, is what is the best model to use for financially assisting farmers in fragmented agricultural geographical areas? That's one of the questions in the Q&A. You think you can take a shot at that?
I think I can try, certainly. I think it's a really good question. You know, I think in general, and I saw another question that maybe will address the other one as well in terms of, financial globally. I think really, in general, moving to a more sustainable agriculture will require building adaptive capacity, and that will happen through investment in resilient infrastructure, supportive mechanism, including social safety nets. I think Thomas has talked some of this, and a greater alignment between regulatory measures. And I think this is really critical, that alignment between regulatory measures, national policy approaches, and support mechanisms that facilitate the effective implementation of these measures. And I think here, to address maybe more directly these questions, that includes also instruments such as blended finance, which really has the potential to bridge the funding gaps and catalyze private sector investment in sustainability initiatives. And really, in bringing in this de-risking through blended finance, will introduce new investors in the sector and demonstrate commercial viability of investment, so blended finance can be eventually phased over time. But that will require really a multi-stakeholder approach and partnership approach between financial sector, the food and agriculture industry, donors and investors, as well as non-government players such as NGO, and the tech sectors, where we see more and more innovations also coming in terms of facilitating access to finance, and also to a number, of technology and practices that will ultimately enable scale, the sustainable practices in the sector. So that would be sort of my try. I'm sure Omo may have some addition to this.
Okay. Monica, if you can just augment what Nadia said, but also another question directed to you while you have the floor.
Sure.
The question is, microfinance institutions frequently face criticism for potentially trapping rural individuals in a cycle of debt.
Mm-hmm.
Sure you're familiar with that. Despite the expansion of these institutions, the economic circumstances of the targeted population often show little or no improvement. My question is, in what ways do microfinance institutions contribute to enhancing the income of poor people? A loaded question, but I'm sure you're familiar with that challenge. Can I pass it over to you?
Sure. Yes, a very loaded question indeed. I think first of all, I would say that not every microfinance institution, and I think a lot of microfinance institutions probably will not fall in this category. There have been instances where a debt, we've seen this examples of debt trap. For instance, in India, there was a microfinance crisis a few years back. I think that for the most part, the microfinance institutions that we work with are very much have a very strong social mission. And also we partner with them to help build the capabilities again in terms of understanding gender considerations and environmental considerations. So they're not going into this blind, making assumptions about what is or what is not there, and then lending to people who don't have the capacity to repay. So there's really that sort of hand-holding accompaniment that must go alongside any financial services partner that we're going into, whether it's a microfinance institution, an insurance provider, a large bank, a digital financial services provider. There's a lot of work and hand-holding that comes into play to ensure that we're not building on top of the wrong assumptions. We really understand the context that we're going into, we really understand the segment that we're working with, and we really try as much as possible to incorporate those considerations in the design of the solutions that are eventually distributed. So, I think that I'm not necessarily addressing this person's question directly. My answer is that I wouldn't put all microfinance institutions under the same umbrella. Just like you have banks that are not working in the best interests of their clients, you have microfinance institutions also that fall in that category. But for the most part, the institutions that we've worked with have been aligned with our vision and our mission, and we've seen some success in terms of the economic development of the borrowers that they've worked with, but also their social improvement and also the use of environmental technology. So those have been the benefits that we've seen in our partnerships.
Okay, that's very encouraging. Thomas, I'll give you the last word here, and picking up on what Monica just talked about. Filling a protection gap, we only have about a minute left. Filling a protection gap is important, and parametric insurance is one of the ways to deal with it. And microfinance institutions can use parametric insurance to de-risk loans. Are you seeing activity in that area in your region or in Costa Rica?
For sure, Carl. We launched in ASAL, as a Latin American Association of Supervisors, Insurance Supervisors, a working group on climate change and related risks and sustainability. And one of the big issues that we are working on is a protection gap. This working group helped up to the whole association in order to create to launch a call to action last May. And every country, most of them in the region, are working on that issue. The real thing is, and again, we do not make a public choice. We don't make up public policies, but we can help a lot the governments to build up this kind of policies. Some countries are working, and Costa Rica is one of them, on the creating the financial strategy to build to rebuild the economy after a great event or natural catastrophe. And one of the issues is how to rebuild the critical infrastructure, because if the government could not rebuild the critical infrastructure, the protection gap will be very, very weak. What I mean, and maybe calling the example of the Hurricane Mitch in Central America, especially in Honduras, some decades ago, is a good example. The country could not rebuild the critical infrastructure, so those companies that have insurance take the money and go away. Because they recover the money, but the economy as a whole couldn't begin in the recovery. So this is a big issue in the ASAL. We are working on this kind of discussions, and it's a big issue in IIIS also, in the International Association of Insurance Supervisors. And our new chair of IIIS have this very clear: climate change and protection gap are two of the most important goals in this new period for the insurance communities.
Okay. All right. Well, thank you for that. We're running out of time here. Monica, I see your hand up. You have a 10-second comment you want to make?
No. I think let's close.
Okay.
I think let's close.
All right. Well, thank you very much. There's a lot of issues, a lot of comments, and a lot of questions, but a lot of very important points were raised. We talked about the importance of environment, doing these things in a manner which is sustainable, but also taking into consideration environmental considerations. We talked a lot about teamwork, and in addition to that, Monica, you also highlighted the need for education of digitization, and I think that is important. You talked about partnerships and teamwork, and all of those things are important. And what is coming across here is that this is a multi-stakeholder solution. This is not one organization, one department that can solve this. And I hope that message comes across, because there are many parties who have to come to bear some of the burdens in solving these problems. At the end of the day, gender equality and financial inclusion, in my mind, took a retrograde step during COVID, and hopefully some of the measures that you guys described today can erase some of those the retrograde steps that was taken and take us forward. So I thank everyone in the audience for the questions. I thank the participants again for the questions, and I thank the panelists, and certainly the people at the Toronto Centre who put this together. So thank you very much. Any last words, anybody else from the Toronto Centre? I think we
nothing from us. Thank you, Carl.
Okay, so thank you very much, and have a good evening, good morning, everyone.